If you own a commercial building in New Zealand, getting the right insurance starts with one crucial step: a professional valuation. But why is this so important, and what happens if you skip it? In the next 3 minutes, we'll break it down so that you can make sure your property is fully protected. Part 1. Why valuation matters. Insurance companies require a professional rebuild cost assessment before they can even give you a quote in some cases. This is because your insurance needs to cover more than just the market value of the building. It has to cover the actual cost of rebuilding. That's including the demolition, the construction, and the professional fees involved. And without an accurate valuation, you risk being underinsured, meaning you could be left out of pocket if disaster strikes, or you could be overinsured, paying much higher premiums than necessary, and we don't want that. So what's the difference between the rebuild cost versus the market value? A common mistake property owners make is assuming market value is the same as rebuild cost. Here's the difference. Market value is what someone would pay to buy your property. Rebuild cost is the total expense of reconstructing your building, including demolition and compliance with current building codes. And it doesn't stop there. The age of your building also affects your insurance costs. That brings us to part 3, building age and earthquake strengthening. In New Zealand, insurance companies assess buildings based on construction date. For buildings built post-2004, typically these have the lowest excess. In pre-1935, these buildings often face higher premiums and excess requirements, as the building codes back then were a lot different. If your building has been earthquake strengthened to 100%, then you may qualify for lower premiums. So how do you actually get a valuation? To get an accurate valuation, you have a few options. First is a registered property valuer for a full rebuild cost assessment. These people are valuation specialists. You could also approach a quantity surveyor. However, we strongly recommend just Googling insurance valuer and going with one of the companies that advertises there. These reports typically cost between $800 and $2,500, but they aren't incredibly essential, and they usually last for 2 to 3 years, so you're not going to have to be forking out that amount every year. If you've recently made improvements to your building, your insurance may not fully cover them unless you've got a valuation done. Fortunately though, most policies do actually include a capital additions limit, which is often capped at $100,000 to actually take into account any alterations you make throughout the year. But in saying that, regularly updating your valuation is important. So to top it all off, a professional valuation isn't just a requirement, it is your first line protection. It ensures you have the right insurance, avoids unnecessary costs, and gives you peace of mind. Need help securing the right cover? Get in touch with us today. Expert advice and competitive quotes from top New Zealand insurers.